Welcome to my podcast. My name is Gianluca, and today we're talking about a warning from legendary investor Ray Dalio. And this time, the message is particularly striking. The world may be approaching a U.S. debt crisis, and investors may want to rethink their exposure to government bonds. Dalio, founder of Bridgewater Associates, has spent decades studying debt cycles and financial crises. His latest warning is that, if the current trajectory remains unchanged, a U.S. debt crisis could arrive in roughly 3 years, give or take 2. In other words, he is not predicting a specific date. He is warning about a window of roughly 1 to 5 years. Dalio estimates that the U.S. government could spend around $7.5 trillion this year, while collecting approximately $5.5 trillion in revenue, creating a deficit of about $2 trillion. At the same time, around $10 trillion of government debt needs to be refinanced, while interest costs are approaching $1 trillion. His solution? Dalio argues that the deficit should be reduced toward 3% of GDP, compared with roughly 6% today. Without a meaningful change in fiscal policy, the pressure on the Treasury market could intensify, and there are already signs of stress. Long-term U.S. Treasury yields have been rising, while Japan, one of the biggest foreign holders of U.S. debt, has been selling treasuries to support the yen. Treasury Secretary Scott Bessent has also announced plans to increase purchases of longer-term government bonds in an attempt to stabilize the market. Yet the intervention has so far provided only limited relief. Dalio says this fits the final stages of what he calls the big debt cycle. His argument is relatively simple. When governments issue more debt than investors want to absorb, yields can rise. If the situation becomes severe, central banks may ultimately be pressured to buy government debt and create money that can weaken the currency and increase inflationary pressure. And this is where Bitcoin and gold enter the story. Dalio is telling investors to underweight debt assets such as bonds and overweight gold and a bit of Bitcoin. He has suggested that roughly 10% to 15% of a portfolio in gold could help reduce risk, while Bitcoin should play a smaller role. Importantly, this does not mean Dalio suddenly considers Bitcoin the new gold. Earlier this year, during an appearance on the All In podcast, Dalio was still skeptical of Bitcoin as a safe haven asset, pointing to issues including its lack of a central bank backing, transparency, and potential long-term technological risks. His current position is more nuanced. Gold remains the established hedge, while Bitcoin can potentially benefit from the same forces that support non-government-produced money. And the market backdrop is fascinating. In recent days, Bitcoin has moved above $77,000, while gold has also surged. Financial Times reports that investors have increasingly turned toward what are sometimes called debasement trades, assets such as gold and Bitcoin that may benefit if investors lose confidence in fiat currencies and government debt. So, is Ray Dalio predicting the collapse of the U.S. dollar? Not exactly. His argument is that the current debt trajectory is becoming increasingly difficult to sustain. A crisis could be delayed if policymakers reduce the deficit significantly. It could also arrive sooner if another major geopolitical or economic shock hits. That distinction matters. Dalio is presenting a risk scenario, not a guaranteed forecast. The bigger question for investors is whether U.S. Treasury bonds will continue to offer the same protection they have historically provided during periods of market stress. If confidence in government debt weakens, assets with no government liability, particularly gold and potentially Bitcoin, could become increasingly attractive. But Bitcoin remains a highly volatile asset, and unlike gold, it has a relatively short history during major sovereign debt crises. So perhaps the most important message from Dalio isn't simply buy Bitcoin or buy gold. It is diversification. Diversification across asset classes, currencies, and countries, particularly those with stronger balance sheets, could become increasingly important if the global debt cycle enters a more dangerous phase. Ray Dalio has been warning about debt for years. The question now is whether the market is finally starting to listen. Thanks for listening. If you enjoyed this episode, follow the podcast for more analysis on Bitcoin, global markets, economics, and the future of money.